Good day, everyone. This is Jason with Top Shelf Traders. Thank you for joining. We've got a good-sized group here today. Welcome. This is another free training series that we're putting on. We're going to go ahead and do a just quick sound and visual check. Let me know that you can hear me okay and that you can see Ray's screen okay. Just give me a quick yes and yes. Thanks, Russell. In the questions box, we'll be using that. I'll be manning the questions box. Hey, Al. Fantastic. Well, we're in the middle of July. Doesn't get any hotter or stickier here in the Twin Cities. My main man, Roger Federer, is facing some serious pressure in a fifth set match against a very tough South Africaner, Mr. Anderson. Let's hope he pulls through. But that's not what we're here to talk about. We are pleased to have Ray Burchett with us here today. He's going to be talking with us about how retail traders can gain an advantage over those institutional high-frequency traders or those that watch fair value. Now, this is particularly interesting to me because I'm a fair value trader. That's a big thing. Right on, Virginia. Let's hope he pulls through. This is a big thing that I watch. I'm looking for those market extremes. So very, very interested to hear Ray's presentation. We've had a long-standing relationship with him. He's been a content contributor for us, and we're thrilled when he had this come out. We got the stars to align, and we're able to get him on this event. We jumped at the chance. If you've heard of Ray before, that's not by accident. If you see on our free training page, you can see the highlights of his career. They go back quite some way, and they all revolve around training and helping traders get to the next level. So today we're going to talk about strengths and weaknesses of retail or institutional high frequency or fair value traders. Including myself probably, and then a strategy for positioning the retail trader at an advantage over those folks, and who doesn't need an advantage. Keep in mind that we keep these sessions really informal. If you've got a question, just let us know. We will man the questions box. If you hear quiet sobbing in the background, that means Roger Federer, and I'm reacting to it. I'll go ahead and put myself on mute. And as always, these sessions are recorded, so along with any offers or links that Ray has for us today, we're going to go ahead and send out a recording. People are still filtering in. If you're on the East Coast, you grabbed a sandwich. We'll get you in and out of here in less than an hour. If you're in any other time zone, welcome. Thank you for joining us, and let's dig in. So, Ray, it's awesome to have you here. I'll go ahead and turn it over to you.
Jason, thank you for having me, and thank you to everyone for being here. I appreciate you making the time. And, I'm real excited to share this with you because I think it fills a lot of holes for many traders. And I have no doubt you're going to feel much better about how to support yourself going forward and in turn have much greater use of time and effort. So without any further ado here, we're going to go ahead and get started. So as Jason alluded to, I began trading in 1983. I came from public accounting. I was a CPA with Arthur Andersen. And then in 1997, I co-founded Local Knowledge, helped pioneer online trader development, served on the PIT oversight, exchange technology and index and options market nominating committees. So very much involved in that 20 plus years. I was in the S&P 500 pit and certainly have continued through online trader development. I founded Trust First in 2013 and actually started doing the intuitive development for traders since 2009. So been at this a long time, also taking this out to the intelligence, military, and business communities. That is another big effort of mine. But just to keep the CFTC happy, we always want to. Trading futures, options on futures, and retail off-exchange foreign currency transactions involve substantial risk for loss, not suitable for all investors. Past performance is not indicative of future results. As we all know, the risk associated with trading is significant. And the best way we can handle that risk, as in anything, is have that high awareness to stay ahead of bad things. And for traders, I define that as meeting the golden rule, only trading when we're certain of state, confident of strategy, committed to waiting for market alignment. That means we know what, we know why, we know how. All our energy is available to develop awareness for when to enter and exit the market. And we can control putting ourselves in that position. And that's where our effort needs to be. We can't control anything else. Can't control who's participating. We can't control volatility. We can't control catastrophic events. All we can control is how we prepare and the strategies that we select, how we quantify the triggering of those strategies, and then having the patience to wait for them and the conviction to consistently execute. So I just want to run through 5 stages of trader development as a good base. Again, fill some of those gaps that a lot of you may be frustrated by. And when I came to trading from public accounting and tax, you know, we had our busy season and we worked more hours, right? I mean, we would just work more hours. Come to the trading floor, and now it's literally 24/7. You know, there's no timeouts. The ball doesn't go out of bounds. And what ends up happening is you have massive amounts of information and events just being compressed into smaller and smaller time frames. And so for me, coming from a traditional business environment, if you will, I had to learn how to dramatically speed up my decision-making process, right? And I'm sure it's the same for all of you. Very few folks have been in what I call a hyperdynamic environment prior to trading. And hyperdynamic environments have so much information presented so fast, we have to function at a high intuitive level to stay ahead of it. And what that basically means is we're so prepared, we have a future vision that's closely aligned with real-time events. And when that happens, those events appear to take place in slow motion, giving ourselves all the time in the world to make the adjustment to get the intended outcome. You know, Jason made a reference to the Federer-Anderson match that's going on. And when athletes are interviewed after a great performance, they often comment on how things appeared in slow motion. And again, the reason why that's happening is their expectation, their future vision was so closely aligned with real-time events, they got what they were expecting. And so that makes things appear as if they're slowing down and gives them all that time to get the racket back just a little bit more, to bend their knees a little bit more, to go through the shot a little bit more when it comes to tennis. So again, that's what we want to be able to do in trading, have that future vision closely aligned to real-time events. And that's what happens, again, when we function at a high intuitive level, and that's a product of being able to filter, process, and apply information most effectively. And that's really the first gap, the first stage of development that traders need to address. And then the second is we have to learn how to quantify the market. And if you've spent any time on a trading platform, you know there's hundreds of tools, combinations, settings, and you get over 1 million combinations really quick. In other words, it's really overwhelming, and trial and error can be very long and drawn out and end up chasing your tail more often than not. And so, you know, one of the things that I'm really good at for my clients is cutting through that jungle and getting to a handful of tools that consistently forecast price movement. And that's really worth its weight in gold all by itself. And then what we're going to talk about today is developing those proprietary method strategies for entering and exiting the market. In other words, putting ourselves in the best position to compete. And then we have to have that daily support, guidance, reinforcement, that objective direction that's going to get us to practical application, because there is a big gap from A to D that people don't see. In other words, A is the knowledge and competency, D is the execution. They don't want to do B and C. And B and C is getting to that deeper understanding for those foundational and functional aspects of development, and then putting the time in and observation and study for validation. People just want to go from A to D and cut out B and C, and it never works. All it does is elevate frustration, anxiety, stress. So trading's no different than any other profession. You got to do B and C. And the way those are done is when you're getting that daily reinforcement direction to help you maintain your objectivity so you can get to that high awareness and strong conviction essential for practical application. And then the last piece, and this is what I hope you're all striving for, is financial independence. This is what I strive for with all of my clients. A lot of them will keep coming back because of the power of the briefing and the chart book and the objectivity that gives them. I've had clients for years, but they're independent thinkers. In other words, they don't rely on me to analyze the market for them. They know how to do the value level calculations. They know how to use the tools. They know how to adjust for volatility. They know how to pick the right triggers. I could go away tomorrow and they would be just fine. It's good to be missed, but they would be just fine. So whatever development path you're traveling, make sure that you're going to end up independent at the end of it. In other words, be able to stand on your own 2 feet. So this format, this is actually module 1 of my advanced training, and this is what we're going to go through today. And so it's really important when we're putting our trader profile together to understand who we're up against, their strengths and weaknesses. And that is essential for getting rid of the little voices. In other words, until we understand how we're positioning ourselves to compete against other folks in the market, we're going to hear little voices, and that's self-doubt. Now, this is an image of the outcome of that stage 1 basic training, teaching people how to strengthen behaviors, causing information to be filtered, processed, and applied most effectively. And what's blurred is that internal engine that optimizes decision-making and execution. And it works from the foundational up to the functional, the execution level for traders. It gives us tangible understanding for how we're best developing and supporting ourselves, how we're creating that high awareness and strong conviction to have that future vision to stay ahead of price. And so when we have that, it leaves no doubt that we're dotting the I's and crossing the T's, putting ourselves in the best position to take the next step and then focus on the analytical process. So I just wanted to share this with you to add a greater appreciation for the significance of that first stage, optimizing the decision-making process. So the competitive landscape for us as traders is, we're retail and we have to understand the other players, and they're large institutions. I mean, that's why the ES, the Dow, the Russell, the NASDAQ exist. They were demanded by the institutional traders to hedge their portfolios so they could be very efficient. They didn't have to keep selling and rebuying stock. They could go to the derivatives to hedge their portfolios. And I hope you guys all appreciate that. We're here because of the institutions. They have the deepest pockets, the greatest resources, generational knowledge, infrastructure, period. And they tend to take a long view of the market. They're in it for days, weeks, months, and often years. And so they are pretty much oblivious to short-term price corrections. It's just part of the market working its way through the trend. And they also have the benefit of using the value of their portfolios to be able to put that up as margin. So it really doesn't cost them anything other than transactional fees to hedge their positions. It's very efficient for them. Whereas a retail trader, at least starting out, we're not going to have that type of capital that we need to hold positions overnight or over weeks or over months. And even if we did, we probably wouldn't have the intestinal fortitude that would come with our swings in P&L because of the leverage futures trading offers. So as much as it sounds great, hey, yeah, I'm going to trade with the trend, it's just not going to work. It's not practical for the retail trader. Because to successfully trade the trend, you have to be able to sit through significant price distortions, if you will. So we don't have the capital is the biggest barrier, at least initially. High frequency traders, they own the tick, and a tick is a one price increment. So in other words, if the ES is trading at 27.80 and moves to 27.80 and a quarter, that's a tick. Or if it moves from 27.80 down to 27.79.75, that is a tick. And the high freak traders control the tick. Their hardware, network, software are so fast they can do north of 1,300 trades a second. Yes, I said 1,300 trades a second. We're not going to compete with that. And it costs a significant investment in putting that platform together, the hardware, the network supporting it, the programming, and then the daily, weekly, monthly maintenance. You know, think about the cost of that overhead just for the framework, and then the payroll behind that. I mean, it's likely north of $100,000 a month easily. And even if we could afford building out that infrastructure, there's no way we're going to be able to assimilate just the functional knowledge and competency we would need to direct and oversee it. It's not going to happen. So trading for that tick, competing with the high freak, is just really impractical for the retail trader. Then there's fair value traders, as Jason alluded himself to being. And what fair value traders do is they wait for a deviation from fair value. Right? Let's say fair value is a $2 premium in the ES. So if it's trading at 27.80 and it's, I should say that the ES is $2 above cash. Cash is at 27.78 and the ES is at 27.80, $2 above. Okay, that's fair value. Now there'll be a deviation from that. Maybe it's $2 more before a fair value trader will get involved. And let's say, okay, when that spread widens out to $4, in other words, if the cash is at 27.78 and then the futures is at 27.82, I'll look to take a short position. But that has to be contrasted against momentum and everything else. There's a whole bunch of other moving parts. It's just not that simple. But for a retail trader, that's probably out of the three opponents, the institution, the high freak, the fair value, that's probably the most likely arena a retail trader could compete in that strategy. But again, it takes lots of experience. Generational knowledge is there for these fair value traders for the most part. And also, they often have the benefit of the same platform, same network. So they're of the high freak guys, so they're likely to be trading the sweet spot of fair value, if you will. So again, those are their strengths. Again, institutions, the trend, high freak, the tick, and fair value, the deviations. And so as a retail trader, it seems like we're screwed, right? We don't have the big capital to trade the trend. We certainly can't afford the platforms, the hardware, the software, the network of the high freak folks. And we're not likely to have the benefit of that platform nor the generational knowledge of a fair value trader. So how are we going to compete as a retail trader? Well, when we have these short-term price corrections against the trend, they're usually not significant enough for the institutions to step in. So they're not going to get in our way. So that's one thing we want to look for. Those minor shifts that are likely to be free of institutional interference. Next thing we want to look for is when those shifts occur, that they'll likely be accompanied by price acceleration. Now, think about high freak guys, they like control. And when there's likely to be price acceleration, that control goes away. Risk gets too great. In other words, high freak guys like lots of data points. And I point out those situations in the training, and we can see how it consistently plays out when we're in between these data points. So what's happening is that when we get this acceleration, they go away because the risk is too great. And then fair value traders, again, they like to trade from a deviation to fair value. And more often than not, when these imbalances start to play out, in other words, these short-term corrections, markets often moving from equilibrium. So the fair value traders are out of the picture. Now you're probably asking yourself, well, Ray, if the institutions aren't trading, and the high freak guys aren't trading, and the fair value guys aren't trading, who's trading? Well, the smart money and the dumb money. And the amount of dumb money is abundantly greater than the smart money. Dumb money are retail traders that don't have that high awareness and strong conviction. They haven't strengthened those behaviors, causing information to be filtered, processed, and applied most effectively. They don't understand the strengths and weaknesses of who they're competing against. Heck, they probably don't even know who they're competing against, and they certainly don't have a strategy. So the smart money waits for these because they know there's going to be plenty of dumb money to enter and exit on. And this is what we wait for. Does anybody have any questions at the moment? Just to take a breath here for a minute. We're moving right along.
Not just yet, Ray. Not just yet.
All right. So I want to give you guys some examples. So again, we're looking for a minor shift to the trend, probability high for price acceleration. So we've got to construct an intelligence package that's going to show us that. And again, we want to be able to see these things coming. Again, have that future vision. So as real-time events play out closely aligned, we've got plenty of time to validate the trigger and get involved. So this is examples of these situations being played out in the ES 10-year note, oil, and gold. I'm not showing any of the tools. I'm just showing where the tools gave us a trigger. And then those horizontal lines are my proprietary value level calculations. And it's pretty easy to forecast the direction when price is going to move, where price is going to move. The hard part is when and the path it's going to follow. And so what my value level calculations allow us to do is really understand the when and the path. So you'll see that in each of these. You'll see it in the ES. You see how it follows those value levels lower. You see it how it followed them lower in the 10-year. You see how it followed them higher in the oil. And then you'll see how it followed them lower in gold. And we didn't quite get to the value level down here at the bottom. But anyway, that's just an example of how these play out. And these are the markets that I cover as teaching examples in the briefing, the chart book, and the Sunday evening review, the ES, the 10-year note, oil, and gold. But they can be applied to any actively traded futures market or stock. And then options traders, and I have clients that they use these tools to really fine tune execution for their strategies. So requirements for the strategy. We have to know what's happening at the higher time frames on the daily charts, because they really control what's happening on the lower time frames. So often, retail traders use very small time frames, 1, 3, 5-minute charts, with no awareness with what's happening at the higher time frames. And so if you take away anything from this training today, please understand you've got to know the elements that are controlling the markets on the higher time frames. When I first came to trading on the floor, it was said, hey, you have to be either an analytical or fundamental trader. You can't be both. And that initially made sense. But the more I participated in the market, the more I realized that was bad advice. We always, or at least I always start from a technical perspective because it gives us the most consistent quantification of market state. But fundamentals are impacting the market all the time. And if we don't know when the probability is high for that to happen, just daily economic reports, the FOMC meeting. This morning we had the monthly, or I should say the weekly petroleum status report. Last evening after the RTH closed, when we and then reopened for the overnight session, we went from 96 down to 72. Well, it was because an additional 200 billion in tariffs were announced on China. Fundamental impact on the market. But a lot of people that don't concern themselves with it, they're going to see that market down 24 points and they're not going to understand why. You have the president abroad. Historically, the market goes sideways to higher when the president is abroad. He's going to be out of the country until Monday evening. Quarterly earnings are starting slow. They really start to kick in next week. You have to know what the expectation is and then how that's playing out. And then that'll help you understand market behavior that much more. In other words, when we understand the big time frames and when we understand the fundamentals, and then we see the market going in the direction that we want to go in, right? Well, we've got all that added benefit. We want to stay or add to our positions. But if we don't understand what's happening at the higher time frames and with the fundamentals, that opportunity is lost. Then, as I indicated, we take those highly correlated tools forecasting price movement. That's pretty much the easy part. But the tricky part is being able to forecast the path price is going to follow when it starts taking direction. And we see that's what these value levels do. They're forecasting the path price is likely to follow when it starts taking direction. Then we have to have triggers to enter and exit. And there's different situations, and the triggers we use are going to be dependent upon those situations. And so we have an arsenal of them, and once we understand the strengths of each trigger, the cool part of it is the most appropriate one will just present itself. It's really not that tough. The tough part is getting to those triggers and spending the time to study and observe so we trust their application, really understand the nuances between them. And again, that's what the briefing, the chart book, and the Sunday evening review is for. And then again, if you've been around trading any time at all, you understand the biggest challenge is having the patience to wait for what you're looking for and the strong conviction to consistently execute. And understand patience requires energy, and energy is a function of trust, right? That is our only energy source. And when we have that tangible understanding for how we're strengthening behaviors, causing information to be filtered, processed, and applied most effectively, which means we keep getting to better information, analyzing it faster, making more out of it, we'll have that future vision closely aligned to real-time events, so things appear in slow motion, and we can make those effortless adjustments that are going to ensure execution. When we understand the mechanics behind all that, guess what? We trust ourselves exponentially more. We have the energy we need to patiently wait, the conviction to execute. And so what does that trust look like? Well, when we have that tangible understanding that we're doing the work that matters most, prepared to do it best, in other words, we've analyzed the strengths and weaknesses of the folks that we're competing against in our own, come up with a strategy that puts our strengths against their weaknesses and understand the value of that, we're much more likely to wait for it because we understand the disadvantage we put ourselves at if we don't. But what most traders end up doing, they have an idea for the big opportunities, but they don't wait for them. They get involved in little stuff away from it. They have small winners, small losers, but more often than not, the losers outweigh the winners. And then when these significant opportunities come, they're just happy to break even. When what we should really be doing is adding to our position. But most folks can't afford to do that because they've got to make back the money they lost. And I'm sure that's familiar to everybody. So you got to change that behavior. And that's tough, but to do it, you have to build that engine that optimizes decision-making and execution, strengthen those foundational behaviors, causing information to be filtered, processed, and applied most effectively. Then you got to have a strategy and the intelligence package that's going to target it. And the other thing that we need to do is know how to read the dome. In other words, the strategy triggers, we go and we look at the dome we want to sell and we see the market trading at the offer, the buyers are in control and we're thinking, uh-oh. We understand that's just part of the market adjusting. So we know how to read the dome. We're going to wait till we start to see that market go back to the bid, sellers in control. Then we'll go ahead and sell. Or the opposite, if we want to buy, we see sellers hitting the bid, well, we're going to wait. We'll buy a better price. But we've been triggered. We want to get in. So now we're just going to fine tune that. We have perspective for what's going on. We're keeping anxiety down, energy low, that high awareness and strong conviction that we need to consistently execute. So I can't emphasize this enough. I'm sure a lot of you, overwhelming majority, are identifying with these weaknesses, these gaps that I'm pointing out. That's good. Every time we see a gap, don't beat yourself up. Say, great, now I know what to fix. Now I know how to gain advantage. Now I know how to make better use of my time and effort. Don't beat yourself up. Look at this as a positive. Now I know what to do. So most retail traders fail, again, because they never strengthen that cognitive engine, to build that engine that optimizes decision making and execution. They don't understand who they're up against. And because of that, they don't have an effective strategy. And because they don't know what they want to do, they don't have the clarity to put together an intelligence package that's going to give them the information, the triggers to do what they want to do, to create that future vision of what's coming so they can make effortless adjustment, ensuring execution as intended. If they have all of that, they're going to have the energy, the weight, the conviction to consistently execute. So that's what they need. It starts with building this foundation, this understanding for how to strengthen behaviors, causing information to be filtered, processed, and applied most effectively. Now, I've got some more to give you here, but the first thing that I really want you to reflect on to get benefit of the last 35 minutes here is to reflect on the value of understanding who you're competing against, your strengths against their weaknesses, the value of having an intelligence package that lets you position your strengths against their weaknesses. And imagine the clarity and focus that's going to give you. In other words, the high awareness and strong conviction to wait and consistently execute. I'm guessing this solves the functional problem for most of you. We still have to build a foundation for this functional operation to sit on. But it should be great comfort in understanding where you need to get to and how to get there. And again, we get all of these stages of development 4 to get to 5 independence. We know what, we know why, we know how. All our energy is available to develop awareness for when. We know how to build, take care of, optimize that decision-making engine. We know how to build the intelligence package targeting it. In other words, a strategy that's going to put our strengths against the weaknesses of the folks in the market. And then we're in that process where we're getting daily direction reinforcement to get everything into practical application. And then we'll have that independence. So I want to give you guys an offer. I created this over the last couple weeks. I don't even think it's been up 3 weeks. But this is the best offer I've ever put together. Again, it's based on my 5-star basic training, which has been around since 2009, and my advanced training since 2013, along with the comprehensive development support. So you can get those on-demand training modules, meaning you can start learning right now. And you're also going to be able to come to my live online daily briefing, again, from 8 to 8:30 each weekday morning. You'll get my evening chart book and market recap. It's about 20 pages, goes out on the eve of each trading day. You can think of this as a daily briefing for the overnight markets if that's what you trade. But it really reinforces all of the technical stuff that's behind that strategy, the construction of that intelligence package and how efficiently it's working. And then on Sunday evenings, I'm live online again from 7:30 on to take a deeper dive, answer questions, look back, look forward. So I'm with you 6 out of 7 days a week, plus that chart book every evening. No other educator does that. So you can get all of this for $397. You get all of this for $397. And you can purchase that at any time. But if you purchase by midnight tonight, I'm going to add the 90-day reflection cycle. That's a $347 value. What that reflection cycle does is you get one reflection each weekday for 12 weeks, 60 reflections total, providing highly targeted direction, guiding you to fine-tune your cognitive engine to your individual development performance needs. So it's just going to be that much stronger, that much faster. I'll also let you pick the start date for comprehensive development support. In other words, you can purchase this now. You can have access to the on-demand learning modules for July, August, go through those as many times as you like, and then start your access to the comprehensive development support in September. Okay, I will do that for those that purchase by midnight. So, great deal. And finally, for those that purchase by midnight, you'll also get a 15-minute phone consult with me once you complete basic and advanced training learning modules. Just tell me when you're done. We'll set up a call and have a discussion as to now where you're at, your expectations going forward, and fill in any other missing spots. And again, please know, and once you start that comprehensive development support, there's plenty of time for Q&A in that daily briefing, and then an extended time in that Sunday evening, so you can literally get your questions answered live online 6 out of 7 days a week, talking to me just like I'm talking right now. So again, for $397, you get all of that, the reflections, the flexible start date. Once you start, it's continuous. You can't start and stop and start and stop. It's continuous from the start date. And the phone consult. So does anybody have any questions? And again, it's all at trust1st.com. You'll see the banner, click on the store. And as my brother likes to say, follow the bouncing ball. Pretty self-explanatory, but that's how to get a hold of me if you have any questions. rhbltrading@sbcglobal.net. And my number is 708-309-9346. But again, you want to purchase by midnight tonight to get the reflection cycle, that flex start date for comprehensive development support, and the phone consultation. So Jason, any questions on your end? And how did Federer end up? Or maybe they're in a tiebreaker. Jason, are you with me? And I would answer the questions directly, but I'm a little bit of a blind on the question panel here. Jason, I can see he's attentive. Can you hear me?
Just a quick audio check here to make sure that everyone can hear me okay.
Yeah, you're good now. I think you just had yourself muted.
Okay, no problem. Federer ended up getting edged out, I think 12-10, no tie break in the fifth set. It was agonizing to watch. He couldn't come close to breaking Anderson's serve. One question that came through, it's from John. He said, hey, Artie has begun his basic training with reflection. How much to add advanced training and support?
I've got to take a look at what he came in under. So just, John, send me an email and I will answer you offline.
Okay, great. And for someone that starts with a 397, and how long is it before they typically start to see results or a change? I would imagine that varies by person and by trader.
Yeah, I tell everybody to look at it this way. It's aptitude, desire, environment. We all have different aptitude. We all have different desire. We all have a different environment. So obviously someone who is comfortable with risk, who is used to a fast-paced environment, who has the benefit of a very competitive academic background, someone who is really able to control their ego, and someone who has the luxury of time, they're going to progress a lot faster than someone who doesn't. So, when we have rational perspectives, that leads to reasonable expectations, energy high, anxiety low. Irrational perspective, unreasonable expectation, anxiety high, energy low. We're sabotaging ourselves. So, one of the biggest things traders have to get over, it's not get rich quick, though that messaging by other resources and educators is out there. Oh, so-and-so made X by, Y and, this, that, or the other. And bottom line is, that's why I don't make any of those representations. You can go to trustfirst.com. You can read my client comments why it's rated 5 stars. Because if you work the program and stick with it, chances are it's going to turn out pretty well. But if you can think you can take a shortcut, that you're somehow smarter than everybody else, if you're that type of person that sees something and lets their ego tell them, oh, got it, know that, you're not going to have a chance. In other words, familiarity is just the starting point. You think about who the most successful people are in law, in medicine, in engineering. They're the specialists with the narrowest focus. They keep going to a deeper, deeper, deeper place of understanding. They never think, oh, I know that. That's not their thought process. Their thought process is, I can understand something a little bit better, and then they keep going deeper.
Got it. Got it. Okay. Fair. Folks, thank you for joining. We're coming right up in on the Q2 mark. Ray, favor to ask, please pass these links if you haven't already to Julie. That way we can make sure that we get this out to everyone as part of the follow-up note. And for those of you that have asked about a recording, of course, we'll be posting a recording of this to our channel, and we'll be sending a link to everyone as well. So, Ray, awesome presentation. Thank you very much. As advertised, very excited to have you here, and really, really great content. Exactly what we were hoping for. Thank you.
Jason, thanks for having me. I appreciate everyone making the time, and jump in by midnight to get these bonuses. I look forward to having you with us. Thanks.
Sounds good. All right. Bye, everyone.